Welcome back. Let's talk about Bitcoin. Why you should own it, how much you should own. Let's look at some charts, let's look at some data, and in the end, I got some price predictions for you. Let's talk Bitcoin. First of all, if you are looking for a video where I'm going to tell you what you want to hear, this is not the video for you. I'm going to tell you what you need to hear. In the crypto world, a lot of people are dramatically overexposed into the industry, into certain assets, and I'm going to tell you what a structured portfolio could and should look like, where you are not overextending yourself and where you can maximize returns after all. So is this video for you? If you're new to Bitcoin and you don't understand the basic concepts of it, this is not a video for you. You might want to start with a more basic explanation. This is a very in-depth analysis where Bitcoin belongs in your portfolio, how much you probably should have, where it is going, and why it is an important addition. I'm also going to touch on altcoins and Bitcoin exposure, and it depends a little bit where you are at your journey. For some, this will resonate a bit more, for others, a bit less. But I guess for every single one of you, there is something important in this video. Let's start off with a quote from Andreatta. He's one of my first and biggest teachers when it comes to Bitcoin, especially his early content in 2015, 2016 was probably the best work ever done on Bitcoin. And he has this amazing quote: Bitcoin is not unregulated. It is regulated by algorithm instead of being regulated by government bureaucracies. Uncorruptible. So short disclaimer, if you want to read the full one, go down in the description. So we touched on a basic all-weather portfolio last time. This is work done by Ray Dalio, and I added here 1% Bitcoin allocation. Why only 1%? Why would I add that here? It depends a little bit. So most of you are between 18 and 35. So this portfolio is not an option for you. We touched on bonds. It's practically return-free risk. You don't want to have bonds if you're under the age of 45. We touched on that in my last video. If you haven't seen that, you might want to watch that. So why did I add the 1%? Because especially if you're older, if you're 50, if you're 60, this might be the portfolio for you. But we're not going to touch on the all-weather portfolio. We're going to touch on how I personally feel a modern portfolio should look like. So we have a few things that are happening in the world. High level of government debt, extreme money printing, so expansionary monetary policy, economic uncertainty, inflation, debasement, significant fluctuation in in commodity prices. You can see that with natural gas, you can see that when you fill up your car, and so on, and supply chain disruption. If you order stuff on Amazon, there's a lot of things that take forever to get there. And all of these things, Bitcoin plays an essential role. I'm not going to walk you through the basic concepts of Bitcoin. You should be familiar with those. But during times like we have them right now, you want to have somewhat of an insurance policy. We talked about gold in my last video, and you might want to own some gold. How much? That depends a little bit on you. This is how I personally approach the coming decade, or at least the coming years. I fully expect us to go into a recession, and I don't want to have an overexposure in stocks. So my main positions currently are Bitcoin, cash, and gold. I own cash. I'm fully expecting inflation to be elevated, that we are experiencing a decade of strong inflation. So why hold cash? Because there could be an incident where prices drop further than we are right now. And in that case, you want to have some cash, you want to be liquid to pick up some cheap assets. That could be gold, that could be Bitcoin, that could be stocks. So liquidity, very important. The second one is I want to hedge myself. I want to have gold and I want to have Bitcoin. On the gold part, watch my other video. Today, we're going to talk about Bitcoin. Your exposure probably shouldn't be more than 25 to 50%. Like if you're extremely young, an extreme risk taker, you can go up to 50%, but the risk of an asset class that is not even 15 years old failing is substantial. So even if you have the strongest conviction in the world, which I consider my conviction to be very high, you don't want to overexpose yourself into a single industry or a single asset class, because it can always fail. You can always be on the wrong side of history. There's many possibilities that this could happen, but I'm not here to induce any fear or uncertainty or doubt. This is intended to be a very positive video. But overexposure is important, because when you overexpose yourself, you tend to follow your own emotions. So keep in mind that your position sizing is extremely important. We're going to touch on that a little bit. So if you are not owning a full Bitcoin right now and you have exposure into cryptocurrencies, you maybe hold some altcoins, you maybe hold some Bitcoins, or you haven't even begun yet. So the first and most important thing is, if you want to have exposure into this industry, you should start with Bitcoin. And you might want to get a full one before you venture into any other altcoins. And there is a good reason for that, because it comes down to clear data. So on the top of the screen, it's a little bit small, but in the top left corner, you see there is currently 22,000 different cryptocurrencies. And all of them are kind of competing with each other. Bitcoin is a strong leader. The market moves up when Bitcoin moves up. The market moves down when Bitcoin moves down. Altcoins are a bit of kind of a leveraged position on Bitcoin, meaning if Bitcoin goes up, altcoins go up more. If Bitcoin goes down, altcoins go down more. You want to have, first and foremost, you want to have Bitcoin. If you don't own a full Bitcoin yet, you don't want to expose yourselves into altcoins. Why? Because out of these 22,000 altcoins, only 3 of them ever managed to make a successful all-time high after 4 years. So we have these 4-year cycles in cryptocurrencies where Bitcoin moves along these halving sessions that happen every 4 years. I'm going to talk about this a little bit later. And in 2 succeeding cycles, only 3 out of 22,000 cryptocurrencies managed to outperform Bitcoin in the long run. And that is just because it's a very new space, and all of these currencies, they're more, you can compare them to venture capital startups, not a digital gold or a digital currency like Bitcoin is. Meaning, if you are just starting with cryptocurrencies or you have some exposure into the sector, start with Bitcoin, get a full one first, or get substantial exposure before venturing into altcoins. From a mathematical perspective, it is the best performing portfolio, just back tested. This was done by Benjamin Cohen, is about 65% Bitcoin and about 35% Ethereum, somewhere along those lines. You can do 10% altcoin exposure just because of gambling. I like to gamble as well, and if you want to have fun, why not? But start with Bitcoin first rule. I know you're not going to like that, but I'm not here to tell you what you want to hear. So we had this is the price when you open up a newspaper, when you follow the news. This is how the Bitcoin price chart currently looks like. Not that great. This is not on a logarithmic scale. I will show you a little bit of what this looks like on a logarithmic scale. And you might think like, okay, this looks like a classic bubble. But Bitcoin did that before. As I will touch on later, we have these 4-year cycles. So it kind of feels devastating right now. We're in the midst of a bear market. We have seen downside since more than a year. Now let's look at some data and some charts to give you a little bit of an overview what actually matters, because don't get too much involved into price. Look at some data, look at some charts. And we're going to start off with the amount of lost coins. So this can happen to any one of us if you send Bitcoin to an address that you don't control, if you lose your private keys, if you forget about them, if your computer breaks down, whatever the reason is, there are an increasing amount of lost coins. Confirmed lost coins are about 7,600,000. So 7.6k Bitcoin are lost forever. So a substantial amount. If we go into the addresses that keep accumulating Bitcoin, so these are the full coiners. This is what you want to do first before you venture into any other cryptocurrencies. You want to become a full coiner. There's only 21 million Bitcoins out there. There's like 55 million millionaires, so there's not even a full one for everybody. And right now we're completely in a range where it's actually possible to achieve a full Bitcoin. If you buy on a monthly basis, dollar cost average every single month, it is completely achievable for people living in the West to have a full Bitcoin. And there will be not a lot of people that will be able to achieve that. And even if you don't, doesn't really matter, because we're going into the price targets later. But your first goal should be achieve a full Bitcoin. So the addresses currently holding more than a full Bitcoin is 1 million. There is only 21 million out there, so 5% is already in the hands of shrimps and hodlers that are working to get there. So let's look at, these are the addresses for, I would consider them whales. They own more than 10 Bitcoins, all-time high. It's higher than we were during the last run-up. And if we go into the supplies, so these are a considerable amount of coins here are considered to be lost as well. And you can really see this will only increase over time. This is just the total supply that hasn't been active for the last 10 years. And now let's go down in time frames, because this is actually mind-boggling. 5 to 7 years, all-time high. 5 years plus, all-time high. 3 years plus, just made a fresh new all-time high and is holding up very strongly. 2 years, all-time high. 1 year, all-time high. What does that mean? It means people that bought in 2015, 16, 17 continuing until now, they're buying and holding. They're not willing to sell. Even though we saw an 80% correction in the price of Bitcoin, nobody's actually willing to sell. Everybody's holding on to their coins, meaning they believe there will be another cycle. And will there? Well, let's dive into the Hopium part of this presentation, where I will blow you away with some charts. So in Bitcoin, we say, when in doubt, zoom out. So this is Bitcoin on a monthly scale. So every candle represents a full month. And you can really see there is a few trend lines you can see here. And this chart is very basic. We have one long trend line from the beginning until the end, where you can see Bitcoin is moving along very nicely on this trend line. Then we have the important monthly closes, which are represented by these horizontal lines in the middle. And we can see a downtrend line illustrated here. And Bitcoin is above all of these major lines, which is extremely bullish. So all levels that are considered real support and are crucial to Bitcoin's technicals, we're above all that lines. Super bullish. This is the stock to flow model from Plan B. A lot of people will be familiar with that model. So Plan B had many models, and he got criticized heavily for some of them. This is his first and most important model. And he prophesied $50,000 Bitcoin. I think it was the first time in 2017 or 2018. And he was right about that. His first model, the classic stock to flow model, still holds up, because it doesn't say that the price needs to hold that level. It just says that it needs to trade around those levels at least once during a 4-year cycle. So I'm not sure about the next halvening and the next cycle, if we really will go up to 500k. We can touch on price predictions at the end of the video. But also please consider the model has a lot more validity than some people want to give it to it. Because a lot of trading that happened during the last cycle in 2021 and 2022 was considered paper Bitcoin trading. So these were products and platforms like FTX that never hold a single Bitcoin. They were just trading derivatives, futures, and so on. So they were not touching into the supply. They didn't buy the underlying asset. They were just offering you a paper version of it. And for this reason, I would say that the model didn't hold up as well as people thought initially. Liquid supply, what does that mean? So all the coins that are held on exchanges, these are usually the coins that are for trading and exchanging, for selling and for buying. Only 22% of these coins are currently on exchanges. All other coins are held in cold storage. So almost 80% is considered an illiquid supply. They're not available for trading. Of course, people can move them out of cold storage, but as I illustrated earlier, you have these addresses, like 1 year until 10 years, that is consistently, they're not moving. The people don't want to sell them. They want to hold on to them for a long period of time. So 80% of the Bitcoin supply currently is illiquid. Only a fifth of the coins are currently trading, and this is about the same level as we had in 2014. Extremely bullish. So let's go into the, this is a floor model done by Willy Woo, and you can see this line consistently going up. And we touched on several occasions on this line. We had a few touching points a month back in December and in January. Now we are already moved to the upside. I'm going to touch on a few other indicators first. Every model, there is no model to rule them all. We're looking at different models. Take the one you feel has some validity, and the others, ignore them. So here we have illustrated 3 different models: RSI, Relative Strength Index, and the other 2, they coincide with a bottom almost perfectly. So you have a bottom here, 2015, you have a bottom here, 2018, 19 at the end of the year, and right now you have an illustrated bottom again. Let's look at some charts from Glassnode. You kind of want to hold here. So the green lines are the lines where you want to consider buying, and above the red line, it's probably a little bit overvalued. This is the extreme value model, so deviations to the downside and deviations to the upside are illustrated in this chart. This is a combination between realized price and extreme values, and you see these red areas here, 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 and here. Also an illustration that we're probably in bottom territory, and this is a good entry point to build your Bitcoin position. Now, we're almost done, and we're almost going into the price prediction part. So we're keeping charts very basic. You can see a logarithmic chart here that consistently moves to the upside, and you can see 3 big downtrend lines. Why are these downtrend lines important? Because a lot of people follow them. You know, technical analysis, these charts, they're like, if enough people believe in something and look at something, it kind of tends to happen. And everybody's looking at these downtrend lines. And right now, we just broke out of one. We're currently looking for support. And if we can hold these downtrend lines, the upside is very, very likely. The floor of the bear market is very likely to be in. Here as well, all of these models can be broken. There is no model to rule them all. Just to illustrate this in a different chart with candlesticks here, you can really see the breakout we had in 2015, the one we had in 19, and now the one we had in 2023. If history repeats itself, this is a great buying opportunity. So where can we go? What could be a potential price target? Where are we headed? So I really like the work that ARK Invest or Katie Wood did on this because they looked at total market capitalization. And there as well, for me, Bitcoin is a digital gold. It's a store of value, something you keep for 10 years, 20 years. This is not a short trade. It's not a get-rich-quick scheme. It's a get-rich-slow scheme. You want to hold on to these coins, pass them on, maybe to your kids, hold them for 10 years, hold them for 15 years. If you're looking for a quick buck, Bitcoin might not be the investment you want to get yourself exposed to. So what does this chart illustrate? It illustrates the total market capitalization that Bitcoin could hit, and they're marking the market capitalization at 28 trillion. So it's currently below 1 trillion in 2021. So the chart is almost 2 years old, but it doesn't matter. How do they come to these predictions? So they actually have 3 price levels. One is, and this is their bearish scenario, is currently sitting at 250,000, which would be a 10x by 2030. Their normal or expected prediction by 2030 is 500 to 600,000, and this is the prediction I believe to be true because this would coincide with the market cap of gold. Gold currently sits at 11 trillion market capitalization. And if Bitcoin is a digital form of gold and will exist in 8 years, which is very, very likely, then I could completely foresee to have an equal market cap than gold. And this is probably a very conservative prediction. And ARK Invest goes the extra mile here, and they say the bullish case would be a 28 trillion market capitalization, which would be like 3 times the amount of gold. Completely on the table because Bitcoin actually is a better form of gold. It's more decentralized, it's more transportable, censorship resistant, predictable, and so on. Every element what money is, Bitcoin ticks all the boxes a bit better than gold. So they are talking here that some funds might come out of remittance payments. So these are people that send money home from, for example, from the United States into South American countries. Same happens here. You could see that in the Ukraine crisis. And then you have companies that get a balance sheet exposure. We saw MicroStrategy, we saw Cash App, we saw Tesla getting Bitcoin exposure, putting it on their balance sheet as an inflation protection, for example. We saw nation states adopting it, namely West Africa and El Salvador, and there might be many, many more. And they are putting nation state adoption at 1%. So if countries would have a very, very small percentage of their balance sheet in Bitcoin, seize the resistant assets. So if you're living in a totalitarian government, if you're living in a government under conditions of hyperinflation and so on, you might want to hold some Bitcoin. And of course, the digital gold element of it, and so on. Companies exposure, institutional exposure, sovereign wealth funds, and many, many more. So with that said, what Bitcoin gives you and why it should have a place in your portfolio. If you're older, you might want to have 1 or 2% exposure. If you're younger, you might want to have a 10 to 20% exposure, and if you're a big risk taker, maybe 25 to 50. More than 50% is not good. You want to start with Bitcoin first before you go into altcoins because of the risks that you're taking. Bitcoin is considered a big risk. Altcoin is considered an even bigger risk. They're comparable to venture startups and not to a traditional conservative investment. And the first and most important rule in investing is don't lose money. Meaning sometimes it's better to take it a bit conservative than to expose yourself or overexpose yourself into a certain industry. So with that said, if you don't have enough position size yet, or if you want to increase your position size, take it easy, do dollar cost averaging, buy every week, buy every month, fixed amount, and have your personal finance in order. Dedicated video on personal finance is coming up, how to do your expenses, how to do your savings, and so on. Personally, I have a lot of conviction in Bitcoin, and I hold about 25 to 30% of my total net worth is in Bitcoin. I work in a cryptocurrency company. I have a lot of exposure, and I want to mitigate my risks, holding other assets as well, and dollar cost averaging, having some savings, some rainy day money on the side. If something happens in your life, if your wash machine breaks, if you need a new car, you don't want to tap into your investment, meaning you need to be liquid at all times. So we're coming to the end of this video. I'm really excited that you made it this far. I have a Telegram group linked down below. If you want to give me some feedback, drop me a comment here on YouTube. Come and join the discussion in Telegram. We have a really lively and amazing community there. And thanks for tuning in. I hope to see you next time. And with that said, take care.